Mr. Schneider, looking back at March, how has the world economy developed in the past month?
If you look at the data overall, it has been a little bit of a mixed bag, but in general, I think the positive numbers have been in the majority. And so the general picture that the global economy, after kind of a temporary trough back in October, November, is gradually recovering. This picture is still in place.
So you're optimistic a bit. What gives you reason for that optimism?
Optimistic, I mean, relative to what? Relative to what had been in the cards back in November, when we had seen global PMIs, for example, slumping for several months in a row. Yes, we are somewhat more optimistic compared to that. But overall, we are still relatively cautious because we see that fiscal consolidation will be there, and it will also be there this year, it will be there next year and the year after. So global growth overall will be relatively muted.
Mm-hmm. One thing what's given us reason to think about is the high oil price. It's still on record highs measured in euros. What danger does it conceal?
I mean, it doesn't help. First of all, it will cost real disposable income on the consumer front, so less money to spend elsewhere. And also we see that it's squeezing profit margins at the corporate sector. They are complaining about higher input prices, but at the same time are reporting that their output prices are not increasing accordingly. So profit margins are squeezed.
So can you maybe quantify this loss, what the world economy could have through the high oil price?
There are rule of thumbs and there are various estimates, and they depend a little bit on the model you use. But the rule of thumb is that a $10 increase costs GDP growth in the industrialized world of around a quarter percentage point, and will add to inflation half a percentage point. Might be a little bit on the high side because rule of thumbs have date back to the 70s and 80s, and the dependency on oil has been reduced since then. On the other hand, it's a supply shock, and supply shocks tend to have harsher impact on GDP growth. So maybe the loss of a quarter percentage point is okay.
Mm-hmm. Okay, let's jump to another theme, the Euro rescue package. A big theme was it in March. New numbers, higher numbers, more than 800 billion euros now is included, not permanently, but it's included into this rescue package. Countries like France or the OECD is talking about more than $1 trillion. What's necessary to be able to solve the crisis? But you think it's something else. What's more important? What is it?
I think the obsession of markets, and I mean this has actually been pushed by politicians coming up with these claims.
And by media.
And by media is leading in the wrong direction. And I think Mr. Schäuble is saying that even 10 trillion wouldn't be enough if a country doesn't reform, hits the nail on the head. I mean, the reforms have to materialize, and if there are reforms, if there is progress, then markets, as we have seen in the decline in bond yields over the last 3-4 months, then they are most likely to be patient, but if there are no reforms, then the rescue packages alone will not solve it. I mean, they are just a plaster for the short term.
This month, our key topic will be on this, the rescue package and the crisis in the Eurozone. You will tell us as well there what kind of reforms are necessary to solve the crisis. But thank you so far, Mr. Schneider.
You're welcome.